Video opens with a fast-paced montage. Stock charts with plummeting red lines flash across the screen. We see the silhouette of a man, John, hunched over in a dark room, his face lit only by the frantic glow of multiple monitors. The numbers fall faster and faster. Text on screen, 90% of traders fail. Why? They say the market is a device for transferring money from the impatient to the patient. For the vast majority, it's a brutal, unforgiving arena. We see it time and time again. Hopeful individuals entering with dreams of financial freedom, only to have their accounts wiped clean. But this isn't a game of chance. It's a game of discipline, and most people are playing it wrong. Let's explore the common pitfalls that trap 90% of traders, and more importantly, how you can avoid becoming another statistic. First, there's the gambler's fallacy, trading without a plan. We see John, eyes wide, scrolling through an anonymous online forum. A hot tip on a penny stock catches his eye. There's no research, no analysis, just a surge of adrenaline as he impulsively clicks buy. The scene crossfades to a roulette wheel spinning, the ball clattering before settling on zero. Simultaneously, we watch the balance on John's trading account plummet, a stark and immediate consequence of a decision based on hope rather than strategy. This isn't investing, it's a high-stakes bet against the house, and the house almost always wins. Next, we dive into the emotional roller coaster that derails even the most intelligent people. The first stop is greed. We watch a stock John owns climb higher and higher. A small, satisfied smile turns into a greedy grin. He could sell, lock in a solid profit, but he wants more. He imagines the peak is just around the corner, but then the chart takes a nosedive, and his paper profits evaporate in an instant. This is followed by fear. The market experiences a minor dip, a routine fluctuation. But for John, it's a catastrophe. Panic sets in. He liquidates his entire portfolio at a loss, his face contorted in fear, only to watch the market rebound moments later. Finally, there's revenge. Stung by his losses, John makes a massive, overly leveraged trade. His expression is no longer fearful, but angry and defiant. He's not trying to make a smart trade. He's trying to win back his money from the market, a surefire way to dig an even deeper hole. Underpinning all these emotional decisions is a catastrophic failure in risk management. Imagine a car speeding along a coastal road. This is your trading account. Now imagine it driving without brakes. That's trading without a stop loss. We watch in slow motion as the car sails off a cliff. A powerful visual for an account being completely wiped out by a single bad trade that was allowed to run unchecked. On the screen, a simple but devastating equation appears, risking 50% to gain 5%. A large red X stamps over it. This is the inverted logic that defines the failing trader, taking monumental risks for disproportionately small potential rewards. Without proper risk management, your long-term survival in the market is not a matter of if you will fail, but when. Many are lured in by the myth of getting rich quick. A dazzling montage flashes on screen. Sleek sports cars, sprawling mansions, luxury yachts. It's the life promised by so-called gurus on social media. But then the images begin to glitch and distort, fading into static and then to black. We see John scrolling through his phone, looking at influencers posing with rented Lamborghinis, promising overnight wealth. His initial look of hope sours into one of deep disappointment and disillusionment. The siren song of easy money is a fantasy designed to sell courses and dreams, not to build sustainable wealth. True success in trading is a marathon, not a sprint. But failure is not the only possible outcome. The scene's tone shifts. The dark, noir-like atmosphere brightens. Sunlight streams into the room. We see images of trading books with highlighted pages, of charts being carefully annotated and studied, of a trader meticulously filling out a journal, logging every win and every loss with calm objectivity. The focus is no longer on the flashing numbers, but on the process of learning. The video concludes with John, his face no longer manic or emotional, but calm and neutral. He analyzes his screen with a focused gaze, makes a calculated decision, and then confidently closes his laptop. He's no longer gambling, he's operating. Final text on screen, discipline. Patience education. Beat the 90%.